All right, so it sucks because I'm gonna have to like throw you guys like down here. Actually, just put one view, so I can't see any of you guys. I'm literally just looking at literally like nothing because since the laptop screen is so small, I have to put it all the way down so then I can fit in the chat. So you guys can just everything in the chat. If you guys could hear me, just let me know in the chat so I could see you guys. One, good, good, fire, great, no battery. Let's fix that. Technical difficulties. They're gonna work. Let's get into it. All right, cool. So you guys can hear me perfect. Everything is good. Awesome. Yeah, I know. I mean, bro, it's like out of my control. This computer's tripping out. This one has no battery. You know, it's charging. There it is. All right, cool. All right, so let's get into it. So, let's kind of basically have like a recap from what we did on last class, which is basically Sunday, and kind of what we had set out for this week ahead. I believe, yeah, we had everything done up to Euro JPY. So following up, we started off with USD CHF being the first trade to have the highest probability set up to move in the direction that we wanted to the quickest. And as you can tell, basically, I believe it was Pratt, I believe. I don't remember when we had announced this retracement. I remember when, I forgot who, but I know we had announced this retracement that we're expecting to them to go long. So this is exactly what I mean by the strategy, which is literally this right here. Because we already know where we were in the weekly, we already know where we were in the daily, we already know where we were on the 4 hour. So we're just waiting for this pullback shift. This is where we would have gone down to the 30-minute. And in the 30-minute, as you can tell, we had a shift of structure here. We had low, low, higher, high, breaking above this point. So you could have either taken the buy above this point right here, potentially gotten stopped out, depends how you place your stop loss. And then if you did another new high, you would have gotten in again. Obviously, you would have not been much in profit. Price would have then came back and then taken you out at break even or maybe as a loss, depending on how you manage your trade. That's basically what I'm going to be teaching you guys this week, right? Because it's literally all that's missing. So this trade, everything that you were kind of looking for at the time, it can have the move and then it do this, or it could be like Euro JPY, which is like why we need every single time frame in sync. Because from what I remember from USD CHF, let me see, USD CHF, I think it was the weekly time frame. No, then it wasn't this one. I know there was a time frame that we weren't in sync with. But so my point is, if you have the trade exactly how we're looking for it, it could really be like Euro JPY. As soon as you get the shift of structure right here, and as soon as you would have taken this trade from this point, you literally just set and forget all the way to your take profit. And what I had explained to you guys, this would have been my first take profit. It would have been the previous structure level right here, get some level of resistance, so on and so forth. So this trade, we kind of waited for it 1, 2, 3, 4, 5, 6 days to happen. Probably a little bit more because we waited for this whole entire pullback. So it's probably 7, 8 days. And it took about 1, 2, 3, 4 days just to get to your take profit. You know what I mean? Like it's a very simple concept. And like today I'm going to cover like exact entry signal, which I'm sure you guys already have like an idea of it, and along with stop loss and take profit placement, which is the final touch. And it's literally the final touch because like it's if it's done wrong, then your whole entire analysis, the whole like this whole entire waiting process, like all of these things could just easily just go out the window simply because you're being a little bit greedy with too much of a tight stop loss. Wicks you out where you're not looking and then flies into your profit. But let's just go over these other trades that we were looking at. AUD CAD. So shout out to the same person that I think it, my bad man, I can't pronounce your name, and I'm not the best at reading. You know, I see you. It's here to pop you up. You got the hoodie on. Pratt the man. So Pratt. So yeah, Pratt got USD CHF and then AUD CAD. Like he literally just popped them up, and bro, they're literally playing out perfectly. Like it does not get any better than this. This is exactly what we call, like, again, you go back to the recording. We're expecting for the right shoulder. At the right shoulder, we need to shift the structure, the bearish engulfing, and then gone, right? So this was something that could have maybe taken you out of break even. And it's something also I'm going to touch on today and then our last class, which will be tomorrow, which is how do you manage this and what do you do? And it's very simple. It's like everything else. It literally has its own answer within your checkbox. I don't think we had a checkbox on this one. No, we did. So AUD CAD played out perfectly. Shout out to you, Pratt, for finding it out. You could have gotten an entry here at this right shoulder. You could have gotten a retest at the neckline. You could have gotten another aggressive entry around here. I personally would have only gotten in at the right shoulder. And then if I would have gotten in right here, and then my stop loss would have been here, my take profit would have been here. I would have most likely either been stopped out at break even, or I would have to have a take profit by my daily structure. So my daily take profit would be here, and I'd probably get taken out of break even on this 4-hour pullback and not get involved just because I'm not as aggressive as I used to be, or kind of right now I'm not in the position to be as aggressive because I'm like focused like on a couple of other things. So like trading right now, this type of movement would have just gotten the best of me, took me out of break even, and then gone to my take profit. But the point is, the move is there, the strategy is there. It's just figuring out how to get it. And that's the whole point of the strategy, right? So AUD CAD, good. Gold, as educational as it gets. Like you guys like this boot camp like this because you guys are literally seeing everything like unfold live. Like everything we talk about on the previous class, we come look at it at this class, and it's exactly what we were experiencing. Like AUD CAD, prime example. Gold had explained to you guys, we need to have a break under this level to then sell. I explained to you that we're looking to sell, we need a lower high, and then we need to be selling at a resistance. In this case right here, we were at a higher low and then buying or selling at a support. Trade doesn't make sense. We need to be under this level. Do you understand the importance of being above or under the levels to take the trade, right? You guys could drop a one of everything. So if you guys are with me so far. Perfect. Because again, I can't see you guys like at all. Like all I'm seeing right now is just my chart and then the chat. Fire. Yes. What do you predict on gold? A pullback? I got you. We'll get into that literally shortly. All right, cool. So gold literally did not plan out how we wanted it to, and that's why we put it as number 2 because it wasn't like AUD CAD. If you notice, again, everything is literally like just repetition. So last class when we were looking at it, we had already confirmation we had rejected our area of interest with this bearish engulfing. We were just looking to enter on this wick pullback. On gold, we had pulled up to the area of interest, but we hadn't confirmed rejected it. So that's why it wasn't nowhere near as clean as this one, and that's why we moved it down. Boom, this happens, right? We'll get into exactly what we think is going to happen next. GJ, just continue pushing up, no sells. Been getting some small little trades within this move just because like again, like we're kind of drifting the car for a little bit. You guys will learn how to drift very soon. And then Euro JPY is just the prime example of a perfect ideal trade setup and just set and forget because we literally marked it up perfectly. Again, go back to 2-3 recordings. We wanted like we've been calling this from this right here, all of this we called this, and then we called this. Like it does not get any more than that. Yes, but didn't expect that much. I'm extremely glad you said that, Jamie. I'm extremely glad, right? So like, why? Like, why would you only expect this push right here and not this push? And I'm telling you, this shit's not done. Like, again, keep in mind what we're doing. let's reanalyze very fast before, because this is going to be so crucial, like so crucial to take profit and stop loss placement, because it is going to go back to the beginning of like your trade analysis, right? So let's pop up this right here. What were we doing here? We are buying at previous weekly structure, and we are buying off of a daily support and resistance. And if you notice, we're going with the buys because we're going with the weekly trend. You're keeping this in mind, right? Like what we like where we are that we're buying right now, we are buying at a weekly higher low. The weekly has to create a higher high. So we're just figuring out how to get in on a nice take profit and stop loss in this point right here. And so we hold it for the weekly higher high or daily higher high, whatever the case is. All we're figuring out, instead of taking the trade on the weekly time frame to have something like this and it'd be like a position trade, is we're figuring out how to scale down and how to like get closer into the trade, so then we can figure out how to adjust this in a way to where now the trade is like, holy shit, now the trade makes a lot more sense. If we notice here, look at the risk to reward difference. You guys get kind of what I meant there? Okay, it's crazy. I never looked at it like that. Yes. Okay. So like for example, like yes, I get it. We're having our entry signal on the 4 hour, and then we're having our entry signal at the shift of the 30-minute structure on this pullback right here. Right? You guys are with me on that? We all understand that, right? We all understand that we're waiting for, this is the strategy right here. You guys understand the strategy, which is the shift of structure on 30 minutes on the 4 hour pullback. Do you guys get that? Does that make sense? Yes. Just drop a one. Yeah. Just drop a one if it makes sense. Okay, cool. So now, just because you're buying on a 4 hour bullish engulfing and at the shift of the 30-minute, does that mean that you're just going to place a little take profit here on the 4 hour? So like, let's say you do something like this, and just for this example, you're just going to do something like this to this point right here because it's resistance on the 4 hour or whatever. No, like you're forgetting the bigger picture. Like if we waited for this weekly candlestick to come back and retrace. It's like right here, right? So this does a weekly high, then we have a higher low, retest structure or whatever here. We expect this to now do a higher high. So why would we do all of the work to get in on the lower time frame here and just cut our take profit short? We know that the weekly is going to create a higher high. We know it's going to keep moving to the upside, keep going with the trend. So why don't we just continue holding our take profit on the lower time frames? All we're doing on the lower time frames is finding a way how to get this smaller versus having it this big on the higher time frame. There's literally no difference. We're just literally going with the trend the same way. Just when we go down to the lower time frames, we're figuring out how to adjust stop losses. All we go down to the lower time frames is to get a smaller stop loss, but our take profit stays the same, right? Obviously, we haven't gotten to the take profits yet. That's exactly what we're going to do today, right? So did you guys understand that little piece right there? So for example, so somebody said, so get the whole pie instead of this, instead of a slice. So not necessarily, right? Because what we're doing right now is we're doing the perfect. I'm crazy with these analogies, right? Or at least I think. Let's see if it makes sense. So we're having the ingredients. So let's say right now to bake whatever, a big pizza, you get whatever. I have no idea how to make pizza, but like I know how to make a donut, right? So let's say you're gonna go make a huge donut, right? Like a fucking gigantic donut, like the size of a steering wheel, right? Like you need whatever X amount of dough. Let's just call it 10 ounces of dough, and then you need 10 ounces of sugar, and then you need 10 ounces of flour, right? Why are you gonna make a gigantic donut if you're just gonna eat the size of a munchkin? Munchkins are this big. So why are you going to do this whole entire top-down analysis, understanding where the market is, doing the full trend identification, buying at a daily support, buying at a weekly support, buying at a daily EMA, buying at a wrong psychological, just to take a little bite and call it a day, call it something like this? There's no point. We're doing all of this ingredients to making a big donut, so you eat the whole donut. You don't want just the peach of the munchkin, because then now instead of doing 10 ounces of sugar, so instead of doing all of this, you would just do 1 ounce. Instead of doing 10 ounces of flour, you would just do one time frame. Like, you guys kind of get what I mean by that analogy? Perfect. Fire. Okay, cool. So I'm going to show you right now, what do I mean by the take profit, right? So for example, Euro JPY, right? So here we're going to analyze take profit and stop loss. That's exactly what I want to cover today, which is going to be, where do I place my take profit? Where do I place my stop loss? What time frame should we look for the change of structure indication to get out of the trade? I'll explain to you that right now, right? So, okay. So let's go to the confluences here, right? So let's, where are they at? Okay, cool. So let's build up the confluences. So here we never build up the confluence after waiting for the higher low, right? Because we were waiting for this higher low right here. So then let's build it out as if we were going to take it. So here we would put, oh shit, did I delete it all? All right. Let's go to the 4 hour. And this is where we would be waiting for the 4 hour higher low, which is this point right here. You guys are with me so far? You guys understand what we're about to start doing, right? It's type point. Okay. I just want to make sure we're all on the same page. You know, if you guys are, if I'm going too fast, just tell me, slow it down. So waiting for the 4 hour higher low. Okay, so now let's say we have 4 hour potential higher low at daily area of interest. So let's just put area of interest, right? Then we go down, and then 7 would be, we know that this is a potential higher low. Why? Because we went down to the 30-minute time frame, and then we saw the shift of structure. So we go down here and we put lower time frame structure shift. Right? You guys are with me on that so far? Clear, simple, doesn't get that complicated, right? Type 1 of it's clear. All right. It's basically repetition of everything we've done. As of right now, we understand that we have the higher low, we have our shift of structure. All we need, literally, all we need is our entry signal. So what are our entry signals? For me personally, myself, I only try to enter a trade if it has a bullish engulfing. Like, it needs to be something like this. If you notice this right here, this is a bullish engulfing over this one. This one technically would have not been a bullish engulfing. This right here is a bullish engulfing. This right here is not a bullish engulfing. This is a bullish engulfing. I need an engulfing at the shift of the structure. Where do I need that engulfing? I need that engulfing where it makes the most sense. So if, for example, in this case, if I can have something on the 4 hour, 2 hour, and then I go on the 1 hour, and then like it all makes sense. If you notice here, there's a bullish engulfing on the 1 hour, on the 2 hour, there's just a bullish doji. And then on the 4 hour, there is a doji. It's not as strong as something as I would want. For example, if I were to show you this one right here, there is a 4 hour bullish engulfing morning star. So I'm looking at this candlestick right here, this bullish engulfing. This is where I will go down to 2 hour. 2 hour, we have a bullish, just a bullish candle, kind of like a morning star formation, not the best. And then on the 1 hour, we have a bullish engulfing this candlestick right here. So you guys are seeing how I'm going down from the 4 hour down, or from the 1 hour up, and I'm confirming that this candlestick is rejecting on all candlesticks. Ideally, I want to see an engulfing on all of them. Kind of like here, for the majority of the part, the stronger the time frame, the better, obviously. The 30-minute time frame, I just look for the shift of structure. And if the shift of structure can happen at a 4-hour bullish engulfing, 2-hour engulfing, 1 hour, whatever the case is, that is ideal. I try to take the trade every 4-hour candlestick close. So if you notice this candlestick right here is going to close in 2 hours. That means this one will close in the next 2 hours, and then this one. So that means at the same time, all of these candlesticks are going to close, giving it a stronger push. Does that make sense? Like, is that a little bit clear? You guys are a little confused? A longer wick on the engulfing doesn't matter. Not really, man. That you want a wick because it confirms that it's rejecting it. Enter the trade at every 4-hour candlestick close. Yes and no. Like, it's not like a rule, like, oh, I only enter a trade on every 4-hour candlestick. Like, it really varies. But again, it's just like you're building out your confidence. What do you think makes the most sense? Because like I can show you an example, bro, like unlimited examples of a candlestick that like on the 1 hour it'll have an engulfing, but then you go out to the 4 hour and then it's like bearish engulfing, right? So like I don't know, I don't know, it's kind of like tricky to find because I have to go back and forth a lot. But let me see. Let me see if I can find the perfect example. For example, like here you have a bearish engulfing on the 1 hour, and then here it's a bullish engulfing. But if you notice the candlestick after, it's literally just like a wick, like there's nothing. What do you think about a pin bar hammer? Pin bar is good. Just personally myself, I like it has to be an engulfing. Like if there's not an engulfing on a time frame, I'm not taking the trade. It's that simple. Like I'm not buying if I'm not at a daily or weekly area of interest. I am not buying. So I need a engulfing candlestick from a minimum of a 1 hour to 4 hour time frame. Any one of these three, either an engulfing on a 1 hour, engulfing on a 2 hour, engulfing on a 4 hour. I need engulfing on one of these time frames. Is not, I just simply don't take the trade. Like I would literally rather have like, makes perfect sense. We need to learn how to shift. Yes, exactly, exactly. So like I would rather take a trade that is 10% and I have an engulfing versus a trade that is 30% and I don't have an engulfing. Like that is how much I need my engulfing because it's literally confirming that it's rejecting your area of interest. Like without the engulfing, how do you know if any of this other shit makes sense? Like there's literally no other way. Like exactly how I told you guys, like you don't know if this pullback, like what a coincidence. Don't you notice you have an engulfing everywhere that is an area of interest? Like doesn't that just like mean something? Like you have an engulfing when you're above, you have an engulfing when you're under, you have an engulfing when you're above, an engulfing when you're under. Uh, right here, you have an engulfing when you're above, an engulfing when you go under, and I can literally go on thousands of examples on the same exact thing. Like, how do you know you're rejecting your area of interest? How do you know you're rejecting the higher low? How do you know if you don't have the engulfing? So that's like really, it's really that simple. On a daily area of interest, if the rejection is a daily engulfing, are you even more inclined to take the trade? Perfect question, and this is literally going to answer it for you. You notice here, daily bullish engulfing. All I need is the higher low to take the trade. I just need that wick pullback. Like exactly how I explained to you guys, you don't need the pullback. By all means, go ahead, take the trade like this, stop loss down here, take profit here, and this is all you're gonna get. But if you would have waited for the higher low and you waited for the shift of structure and you waited for the engulfing, now you have confirmation. We're going to reject from here. There's no need to have a stop loss all the way down here. You just simply shorten your stop loss, giving you a greater risk to reward. So the point of the daily engulfing, it is 100% going to incline me to take the trade further. All you need is this little higher low, the wick pullback to take the trade. Same thing, vice versa. Bearish engulfing, you need this wick pullback. You need to sell at the lower high or buy at a higher low. Morning star, evening stars count as well, 100%, 100%. That's like even stronger than like an indication. But like, bro, like I'm telling you, these engulfings is just like everything for me, bro. Engulfings, it is what it is. Like I need the engulfing. Do you guys have any questions on that? It's very self-explanatory, honestly. Like once you get the shift of structure, now you just need an engulfing. Because after you confirm the shift of structure, you need your entry signal. And you need to have your entry signal on a 4-hour, 2-hour, 1 hour. It's the simplest rule, probably out of all of them. And when you usually have a shift of structure, then like there's an engulfing right next to that. So it literally like it's back to back. What do you think if there's no engulfing on the 4-hour, but there's one on the 1 hour, for example? What do you think? But there's one on 1 hour, for example. So exactly, I mean, this right here is it answers that question. So if there's no engulfing on the 4-hour and there's an engulfing on the 1 hour, okay, I need an engulfing either on the 1 hour, 2 hour, or 4 hour. The stronger the higher the time frame, the stronger the engulfing, and the stronger the confluence. But the engulfing is the make or break. Like I will not buy if it is not engulfing. I will not sell if it is not engulfing. What about the 30-minute? Not really. The 30-minute, I just use it for like the shift of structure. But I'm telling you, when you have a shift of structure, as you notice right here, this bullish engulfing, yes, it engulfed, but it didn't break the structure. It didn't break the structure into this point right here. And if you notice this point right here, when this body closed above this lower high, when you go to the 1 hour, it gives you the engulfing then, which is this candlestick here, or this one, whatever. Brian Miller, love so much trading. I would literally, yeah, trading can be fun once you know how to do it, for sure. I'm telling you, you guys are ready. Like the way I'm explaining, like imagine explaining this without knowing how to explain it. Bro, I went crazy. Like my first boot camp was such a mission. Now it's very simple because of this. Like I'm literally building you guys out your trading plan and everything that you have a question on. This right here simply asks it for you, right? Where am I buying at? I don't know. Where are you buying at? Oh, we're buying at a daily area range. Oh, okay. What do we have on it? Oh, we have a daily bullish engulfing. Oh, okay. What else do we have? Oh, we have around psychological level. We have a higher low. Okay. How do we know it's a higher low? Because we have the lower time frame shift. Are you ready to take the trade? Is there an entry signal? Boom, done. You're just seeing the beauty of that, right? Like it literally is doing it all for you. Obviously, you're typing it up, but the market is telling you everything. I'm not like everything here is 100% fact. Like I'm not making any of these things up. I'm not saying, oh, this Bollinger Band. Oh, actually, let me go in here and let me adjust this from 50 to 51. Now it looks good. No, it's not the case. Do you guys have any questions on this so far? Do you guys have any questions? Is it simple? Drop a 1 if it looks clear. Again, I can't see any of you guys' faces. All I'm seeing is just the chat. Okay, perfect. Fine. So for example, let's go to AUD CAD. What a coincidence at the AUD CAD when we have this 4-hour bearish engulfing. What do we have it? Area of interest, bearish engulfing from around psychological. I can guarantee you when we go down to the lower time frame here, there's a shift of structure. Let's find out. This is where we go down to the lower time frame. Wow, what a coincidence we have here. Higher high, higher high, higher low, higher high, boom, bearish engulfing right here, break of structure. So once we have the break of structure, this is where we'll look for the engulfing. So right here, this is technically where we broke the structure. You notice right here, see the cross here? I'll put it like this, it looks more clear. You see that body closed above, making this now bearish on the lower time frame, giving it the lower time frame shift. So we start from the left to right. There's still no engulfing here. Oh, what do we have here? Your engulfing candlestick. All right, cool. Do we have another one? Boom. Now we have a 4-hour bearish engulfing, 2-hour bearish engulfing. You guys are seeing how I just did that? You're just seeing how simple it is. Like there's nothing Like there's nothing more than that. Does that make any sense? Like this is a good example, is it? Wow. What if it is a huge engulfing when it closes makes your risk to reward significant? Okay, what if it is a huge engulfing when it closes, making your risk to reward significantly less? Let's move on to the next trade. The trade doesn't make sense at that point. That's exactly what I'm going to touch up now on take profit stop loss. Question. Yesterday you said you preferred AUD CAD TO. I'm not sure what CO means. Why? Because it worked out exactly like you said. I don't understand that question, bro. You wait for the pullback after the engulfing if you want to, but the engulfing is my green light. Like the engulfing is 100% my green light. So wait the four engulfing. Wouldn't your stop loss be big? But so is your take profit. Um, would you prefer AUD CAD to USD CHF? Damn, man, I'm still not getting the question on this. My minimum risk to reward is 2.5%. Because again, all I need is one trade a week, hitting a 2.5% a week, giving me my 10% a month. Trust me, guys, like you don't need more than 10% a month. Like go out there to any hedge fund, to any venture capitalist, like you're never gonna make 10% a month. You'll make 15% a year. So imagine if you're doing 10% a month with just risking 2.5% per trade. All you need is just 4 to 6 trades a month. Like it's easy. Trading is not supposed to be hard. You're not supposed to be here every single day. Like I am telling you guys, in the next 6 to 12 months, I'm gonna spend probably 30 minutes to an hour in front of the charts every 24 hours. Like I don't want to be watching the charts at all. Get this man on Wall Street wondering, would you prefer the shift? Okay. So for example, when it comes to stop loss and take profit placement, so we're entering this trade. Again, keep in mind, we're entering this trade on the 4 hour, engulfing your 2 hour rejection, whatever. So we know the bottom of this wick is the supposedly last of the higher low move, right? Let me repeat that. We know the bottom of this wick, which is right here. Again, let's pursue whatever. I can't even say that word. We're right here at this point, and we go down to the 30-minute, and then we know that the bottom of this move after this candlestick right here. 1 second. There you go. We know that this is supposed to be the bottom of this move. Why? Because we just shifted the 30-minute time frame. You guys are with me on that, right? Does that make sense? Type one. Type one if it makes sense. And somebody's asked a question, but I got lost. Okay, so would you consider that placing a stop loss right under this point makes the most sense? Because if you realize, if this trade hits your stop loss, you were completely wrong. Now this is making a lower low that it is now going to create a lower high and then continuing to the downside. The place, again, this is super, super important. There's just so many important aspects. Like whenever you're going to place your stop loss, if it hits it, you're 100% wrong. Let me say that again. When you place your stop loss, it has to be placed in an area where if it gets hit, you're 100% wrong, or at least for the time of this pullback, right? It's not going to be just the wick out. There's a lot of people, what they'll do is they'll take this trade right here, and then they'll put the stop loss 50% from the candlestick for whatever reason, or they'll put it at the bottom of this body. And this is where I ask a very simple question. If price hits your stop loss, are you 100% wrong? You'd be like, no, but it's tight. Risk to reward is whatever, good. Like, dude, that just makes no sense. Like, what if this just literally does a wick like this, and then you're done? Oh, well, whatever. No, we place our stop loss at a point. If we're wrong, we're 100% wrong. So if this is the bottom of the move, I give it either a 5 to 10 pip breathing room from that point. So I always obviously go from the bodies. So if this is the body of the move, so this is technically the lowest point that it is supposed to go. If it were to hit this point again, now we are completely wrong. So for example, if this were to be the point, I simply just mark up right here and I just add 5 pips to it. So I'll do something like this. Because if price now body closes under this point right here, that means that now this has created a lower low where it's going to potentially create a lower high, so on and so forth, right? Let me show you guys another example with AUD. Sometimes it hit, but it won't. So for example, let me show you guys right here. As you can tell right here, price right here, did a high, higher low, higher high. We body closed under, shifting this. So I take my sell here. Let's say that this was the engulfing on the 4 hour. I have to put my stop loss above the point of where if it gets hit, meaning if price comes into this area, let's say right here it does this and then it hits this point, we're now creating a higher high, making this completely wrong where now we can create a higher low and then continue going to the upside. So if this were to be the point, let's call this 35 pips. I would then give it 5 pips of a breathing room. So now we're at 40 pips. So if price were to hit this point, I am now 100% completely wrong in the trade. Let me show you guys another example. Just so you guys see a couple examples before I ask you guys like some questions. Where was it that we took a trade? For example, let's go to USD CAD. What was another trade that played out that we were kind of looking at? I don't know. I think it was NZD CAD maybe. AJ. Let's check it out. AUDJPY. For example, if this trade right here, we were looking at it right here. So for example, let's say we take this trade right here, boom, right here, and I put my stop loss under this low, which would be this low right here, and I put my take profit wherever I put it. If you notice, when price hits my stop loss, it has now body closed under it, now giving me a lower low, so where we should make now a lower high and then go down. So I'm completely wrong. I'm putting my stop loss, this goes back to the principle, it goes back to the beginning. I'm putting my stop loss, let's say it's like this. So hard on this laptop or this trap. Let's say it's like this. Let's say this is like this. When I'm taking the trade, so we're taking the trade on this pullback. Say we're buying at this point right here, at this higher low. This is the area of interest, whatever. When I place the trade on this pullback right here, then now we have shifted bullish, gone now up to the upside. In this lower time frame shift, you know there's a higher high and you know there's a higher low, right? On the 30 minute. You guys are with me on that? Does that make sense? Type 1 of it makes sense. Fire. Everybody's clicking one. Perfect. Okay, so doesn't it make sense to put your stop loss under that higher low? Because what happens the moment we body close under this? Holy shit, now we've gone from bullish to then bearish. So now this goes to lower high, and this goes to lower high. This goes to lower low. Does that make any sense? Great question. I was waiting for that. Okay, for perfect. It's making sense. So now, if that happens, do you adjust and take the trade short? No, because remember, this is just the higher low because we are still technically bullish on the overall daily time frame or whatever time frame it is you're buying. Right now, we're just buying at the higher low on this pullback move. Like again, we don't know when this is going to stop in here and then do the higher high. This is a potential higher low. We're buying at the potential. So this can come into this area here now and then shift here from bearish to then bullish again. And now this is the move where it actually has the push all the way to the upside. We don't know when this move is going to stop, but we do know that when this goes bullish, it has a higher probability versus not. So you don't want to now completely shift your trade, but you're placing your stop loss on the point where if it is wrong within this move, it is completely wrong. It's not just a wick up. What if the 30-minute breaker? What if the 30-minute break of structure happens far away from your area of interest? Would you still take the trade? 100% no. Again, it goes back to the principle. I am only going to buy if I am at a daily or weekly area of interest. I will only take a buy if I am at a higher low, and I will only take a sell if I'm at a lower high. These are just concrete, not moving. Doesn't matter if I'm drifting, if I'm taking scalps. It is the same. It's the same everything. Nothing changes. So I'm placing my stop loss on the lower time frames, and then we'll now get into the take profit. I just want you guys to get the stop loss first, because take profit is, bro, it's so easy. Like I covered in 2 seconds. So we don't want to take any chances if we're in a trade. Exactly, yeah. Like you're placing your stop loss on, like you're placing your stop loss. If you realize where we place our stop loss here, like we're placing it at the bottom of this wick, right? We don't obviously know when this wick is gonna stop, but we're placing it at the bottom of it because we're buying on that wick. Does that make any sense? How do you set your alarm? Pratt, I know you're on the money, Pratt. So the engulfing is the confirmation to enter. It's a mix of the engulfing and then the shift of structure. It has to be both at the same time. In a way, like it could be like 30 minutes, an hour later, whatever. Just reading through some of the questions. Do you guys have any questions so far on this? I feel like the entry signal is very simple. Entry signal is just pretty straightforward. You just need to have a bullish engulfing at the shift of structure. It's really that simple. You need to have an engulfing on one of these time frames, either the 1 hour, 2 hour, or 4 hour. It's a very simple side note, very simple. So what about re-entries? If price broke through your first area of interest, hit your stop loss and began retracing to your second area of interest. So that's exactly what happened here. If you notice here, we broke through our area of interest 1. We never got the shift of structure here. We never got anything we were looking for. If you notice here, this is where we were going to wait for the shift of structure. If you notice on the 4 hour, we never got any form of rejection other than this. What do? We just wait for it to come to our next area of interest. Like, and so we don't have a higher low, and so we don't have a shift of structure, then we don't take the trade. It has to be at an area of interest. So you notice this happened at area of interest, area of interest. This has probably been like the most beautiful trade to set an example for the whole entire course. And I'm so glad it played out live and with enough time. It is just perfect. So technically you always enter either on the 1 hour, 2 hour, or 4 hour, not the lower. So I am entering on the 4 hour, 2 hour, or 1 hour bullish engulfing, but I'm not going to care about the engulfing until I don't have the lower time frame shift. If you notice, there's levels to the entering the trade. Entering the trade is the absolute last thing, obviously. But before we enter, I need to have my shift of structure. I need to have my higher low, and I need to have my rejection from a daily or weekly area of interest. Those last 30 seconds, what I just said is my whole entire strategy. I can say it again, very simple. I will not enter a trade if I am not buying or selling at a weekly area of interest or daily area of interest. I will not buy or sell if I don't have a higher low or lower high. and I will not entertain entering the trade if I don't have a lower time frame shift on the 30 minutes, 1 hour, 15-minute, whatever makes the most sense. And I will not enter a trade until I don't have a bullish engulfing on the 1 hour, 2 hour, or 4 hour. That is literally my whole entire strategy. Did you guys get that? Type one if that made sense. This is crazy. This is insane. Pratt said he's ready. Fire. It's very simple. Very, very simple. Like everything I just said, I have on a sticky note next to my computer. You guys can have it too. It's literally just four basic things, five basic things that then get displayed across whatever the markets are showing. Again, this is everything the market is showing me. It's nothing more than that. What if the 4 hour breakage structure happens after it taps the area of interest, but it happens far away? Again, you're literally answering your question. Whatever happens far away from your area of interest, can't take the trade. I need to be buying at an area of interest. It's literally that simple. Because again, like that lower time frame shift, what's supporting it to keep going up? Nothing. It's not at my area of interest. So there's like it just doesn't make sense for me to take it. Take right now, like let's say, let me see. Let me see. How can I find an analogy for this? Hmm. It's like if you were to want to like charge your phone, like let's say you have like a cable and like your phone's here and like the charger's here, like you literally can't because it's like maxed out. Like you either gotta like move your phone towards this or you gotta find a different switch. Like you can't extend this anymore. This already has hit its max. It's the same thing. Like you've hit your max confluences in a way until you reach your area of interest. Once price gets to your area of interest, then the trade makes sense. Then once you have your area of interest, then you can type of the rest of the stuff. If it's not in an area of interest, it doesn't make any sense to take the trade, in my opinion. I like the way that I trade. Great question. So they ask if on AUD CAD was my entry signal a little bit far from my area of interest. Technically, not really, because if you notice, we've already confirmed and like we've already rejected it. We've confirmed it. Like I feel like what somebody's asking me is like, well, I take a trade, so like let's say that this is my area of I think what I'm getting asked is this. Like let's say this is my area of interest. Let's say that this is my area of interest right here, and I get the break of structure right here. Will I take the trade? No, because we're not at my area of interest. Like we need to get to my area of interest and then confirm we reject it. And that's exactly what we did here. We confirmed rejected it. You would have just entered on the pullback. Very simple. Does that make sense now? We've officially leveled up. I've always gave my room too much breathing room to hurt the risk to reward. Well, that's the whole point of my strategy. Like everything that I'm teaching you right now is literally teaching you how to get that right stop loss. Like you're gonna place your stop loss at the bottom of the lower time frame shift or at the top. So I don't have Discord on this computer, man. My bad, bro. So when it comes to take profit placement, and I'll just like this is probably like just like a little like hint. It's just like so simple. Where are you buying? Where are you buying? Like where are we buying here? Let's see. Where does this say we're buying? Where does this say we're buying? No, but like yeah. Are we buying on a weekly, daily, or 4 hour? Where are we buying? All right, a couple of you guys already got it. Where are we buying here? Are we buying weekly, daily, or 4 hour? We're buying at a daily area of interest. Daily. Just a weekly structure, daily area of interest. What does that mean? Daily take profit. It's literally it. Like we're expecting for this to create a higher high. Why are you gonna set a take profit in the middle of no man alone just because fuck it? No, you're gonna place your take profit at the next structure point, which would be this point right here. Same exact example for AUD CAT. We're taking the trade off of a daily area of interest, 8,900, daily support, 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 so on and so forth. You're going to place your take profit at the next structure point. If you notice, the next structure point here would be this zone right here. It's the next, literally the next move. It's the next place where price can pull up and stop. Let's say vice versa. Let's say we were to be buying right here. Let's say this is a high. We're buying at this higher low. So let's say we're gonna buy right here. We take our trade here. We take our stop loss here. My take profit is the next daily structure point. If you notice, structure point would either be here or it would be this structure point, because this is the next structure point of where price can potentially stop. There's nothing wrong with missing out on this whole entire trade. Absolutely nothing. Like, it's just part of trade. You notice here, same exact thing. You're buying at this point, your take profit is the next structure point. Because what can happen is price can come into this point and then do like a little double top and then come all the way back down. Like, it can literally just reject this area. So when it comes to the take profit placement, it's literally just the next structure point of the time frame you're buying it. So for example, let's say right here for gold, we're expecting a pullback into this level or into this level. My take profit is going to be this level right here, the previous daily structure point. Again, it's going to be this point right here, because price can come in here, create a double top, and then go to the downside. Does that make any sense? Do you guys have any questions with that? It's very simple, very, very, very simple. And obviously it's going to be at the bodies of those areas. Do you think about shorting the counter move maybe, or too risky? I do it, but obviously like I don't want to teach you guys that just now. Like, once you learn how to trade like this, you'll learn how to take those trades. Like, we've had multiple examples how we call those pullbacks, how we call, bro, we called this whole entire pullback, we called this pullback, we called this pullback. Just if you determine it's worth your trade, by all means. I just personally try to stay away from those. Would you ever hold that for longer than your daily structure point? Yes. So for example, let's say if I were to be involved in this trade, I would 100% still be holding this trade because it body closed above the structure point. So this has confirmed that it's not rejecting this level. It's clearly not strong enough to make it come back down. It's now body closed, so now it can have a little pullback to continue going up. Do you place alerts at these potential areas where on the lower time frame shift will happen? Reversal to get out. So honestly, I set and forget till my take profit. When it gets to my take profit, so for example, let's say this is my trade, and then this would be my take profit. Once the trade gets to my take profit and it now body closes above, I now analyze. I'm like, all right, should I keep holding into the next structure point, which would obviously be this next level right here, because it's literally the next structure point? Or should I just close basically where I am right now, because this could potentially now have a bigger higher low to then have the next higher high? And that's basically where I'll assess. But for the majority of the time, I would like, there's just no point to like I'm good with 6%. Like, I'm good. Like, this, I'm really good here for 2.5 weeks. I technically don't have to take a trade for that much time, because all I need is 2.5% a week. Like, I like, that's more of like a greed thing. Like, oh, like when I hold past my area of interest, it's just a greed thing. Like, there's no, like, I try to not be as greedy as I can. Would you buy if price is an area of interest but the forward time frame is not in sync? Yes, it you just depends on the grade. Can tomorrow's class? Yeah, so tomorrow's class is gonna be just like everything from top down, like doing a full section on this, a full section on this, full section on this, on this, on this, on this, on this, on this, until the end. Because I'm like, the ending part is literally just, it's so simple. Like, it's literally, once you get the lower time frame shift, you get a bullish engulfing, you take it. That's it. Tomorrow. We've came far, but the reading the market is more simple than ever. Appreciate it, Jeremy, honestly. So do you guys have any questions so far with today? Today it's been entry signal, it's been the stop loss placement, and then take profit placement. Very simple. Like what do you guys think so far? I'm excited. I'm ready to put in the pot out. Yeah. And then obviously like come tomorrow, it's gonna be like I'm gonna prepare you guys for the next 30 days for you guys. Obviously like now you guys are like with me, but I want to prepare you guys when you guys go on your own. What do you guys think? Fire, fire. Pratt is ready. iPhone is. I'm not sure who iPhone is. I don't understand that question, David. Do you guys have any questions so far? Any concerns? Any doubts? On what session? So, try to keep it in between London and New York, ideally. Would you say pin bar or doji is less powerful? Like, would you stay well? Like, will you still wait for the engulfing? I'm just gonna let this answer. This is just why I answer that question. Can we see another example? Sure. When do I go break even? Like I can touch on that tomorrow. The thing is, like break even is such a tricky thing. Like break even, like you're supposed to go break even at a 1-to-1. Like once you like, let's say I risk $100. Once I'm up $100, I then go break even. But it's very tricky because like price, for example, like let's say like there's so many different examples. It could get overwhelming. Like let's say we would have taken this trade on AUD CAD, and then this is my take profit here. If I would have gone to break even at a 1-to-1, this price would have came back, stopped me at a break even, and then I completely missed out on the whole trade. So for me personally, myself, I honestly like I really try staying away from break even because kind of like the whole going break even thing is like to me it's you're not comfortable with the risk. Like people can say, oh, like oh why just never like if you're never let a winning trade turn into a losing trade. And then yes, I agree to a certain extent, but just let the trade play out, man. Like, you know how many times these wicks have come back, taking me out of break even, and then just go? Because the market needs to fluctuate. Like, the market just has to have these pullbacks. So, like, honestly, like the way that I personally see it, if you want to go break even as soon as you're 1-to-1, like, you're just not comfortable with what you're risking. So, for me, I just, like, literally just, I don't, like, I risk what I don't care. I love seeing your strategy being taught in such a spoon feed way. You have mastered the art of mentorship. Appreciate it. So we have Austin in here. Austin is probably, I think, from boot camp 1 or 2. I know he's one of the OGs. Got him a couple payouts. Appreciate you, Austin. I'm trying, man. I think this is for sure the best one I've ever done, man. 100%. Yeah, Austin's an OG. Austin's very, very, very smart. Though, because I targeted 3%, but moved stop loss. Only got exactly, yeah, yeah. Oh, so you don't move your stop loss? No, I don't. I don't move my stop loss into profit. I move it into break even. Like again, this is what I'm teaching you guys, right? Like there's times where like I could be taking the type of trades that I take now during London, and then I will move it because obviously like like the inner day trading or day trading should move a lot faster. But I'm just saying like for the properly, putting on your seatbelt, checking your mirrors every single time you get in the car, the ideal thing for me is to just set and forget. Like, what's this whole messing with the trade? Like, let the trade do its thing. You either get stopped out or you win the trade. It's very simple. There's no in between. The whole break even thing kind of is like, I don't know. It's debatable. It really is up to whoever. Like, what type of risk are you running? For me personally, myself, I don't really care. Like, I'm okay with the risk. That's why I'm risking that type of money. So you guys have any questions on that? It's a very simple concept as well. Like everything from this point forward is very simple because it's just up to your own personal like risk tolerance. Like damn, like I just risked $1,000. I'm up 1,000. Am I willing to see 1,000 in red? Nah, fuck it. Go break even. So that's just up to you. But then are you okay with the trade coming back to break even and then going to 3,000 in profit? So this is just a battle you have to go on with yourself. There's no right or wrong answer because everybody has a different feeling. Because then this trade right here, probably like 2.5, 3 years ago, this would have fucked with me heavy. Like if I would have taken this trade, gone to break even, stops me out of break even, and then goes flying to my take profit, where I could have gotten my 2.5% for the week and I was done for the week on a Tuesday, that would have messed me up. I would have tried to take a trade right now, making me now lose 1 or 2%. But now, as an experienced trader, I see this and I'm like, all right, cool, next trade. Because I know my strategy works. I'm seeing it literally every freaking week. Like, there's no like questioning on my skill set. So I don't care if this type of thing happens. So it's literally in just the position. See, look, Pratt said it did mess with him. But I mean, it's because you know you're just beginning your journey now, man. Of course, it's gonna mess with you. It messed with me too at one point. But now I'm just like, all right, cool. I'll see this pattern again next week, the week after, next month. Who cares? But it'll come again. So that's why I like you have to have like this nonchalant vibe to it, but there's no way you can teach that. Like for example, I'll never forget this when I started chilling with Raul. Like this whole Lambo lifestyle, like this crazy lifestyle that's this guy's normal. Like at the time, I was like amazed by it, and I'm like, holy shit! And then bro was just like, yeah, bro, whatever. And I'm just, bro, how the fuck, like, dude, like, we're in a Lambo right now. Like, how are you not tripping? He's like, yeah, bro, like, I have like two more. My dad has like two. What's the deal? That's why I understood. Like, he's not experienced. Like, it's like whatever to him. And now I understand it because I'm at that point now. I'm like, yeah, like the Lambo's like the normal. It's the same thing. Like this type of trade, this happening, like it's the normal. It's gonna happen. Like there's nothing you can do about it. You get what I mean? I think that was a great analogy for it. So yeah, I want to leave more psychology tips and like kind of other things for tomorrow's class because I want to like do everything in one on tomorrow's class. I feel like that was really good because I'm telling you, when I first started chilling with Raul, I was like in shock, right? Like I was like amazed, and now 2, 3 years later, it's just like yeah, whatever. It's just a car, you know. But at the time, that was it's just different. So that's kind of like where you guys are now with trading, of course. Can you repost Monday's video? I only have it as a zip, and I'll probably. Oh, actually, hmm, I think I can get it. Yeah, I can get it. I can get it. Let me just stop this recording.